from Bloomberg's world headquarters in New York City, I'm Matt Miller with Sonali Basak. Kaylee Lines is on assignment. Great to have you here, though.
Nice to be here. It's a summer day. We're bringing the heat.
And we're back up over $30,000 and continue to hold there. So we're going to talk a little bit about that throughout this program.
Yeah, we sure are. Matt, coming up, we're going to have Bitcoin because it's rallying to a one-year high. Fidelity is reportedly readying its filing for a spot ETF of its own.
We're also going to focus on Bitcoin miners as operators curb operations in Texas. A heat wave drives electricity prices sky high and threatens to cripple the grid.
We also have Alex Thorn from Galaxy Digital. He's going to tell us what he's watching as the hype around that spot ETF boosts sentiment. That's all ahead, but first we're going to take a look quickly at crypto markets first, because as we told you, Bitcoin is up on the day. It had been kind of muted the last couple of days, but now we have more excitement around more ETF filings. We have a futures ETF that has launched again today. Ether also up more than 3% on the day after a little bit of cooling, but again, on a 7-day level, both of these crypto assets are up quite meaningfully. I want to also talk about Bitcoin miners here for a second, because with the halving, there's some question about the rewards that these miners get in the longer term. But with the boost in Bitcoin, which they hold, you are also seeing the miners up on the day. You're seeing 11% rise in Hut 8. You're seeing a 5% rise in Bitfarms. You're also seeing the capital markets open with Hut 8 just yesterday, Matt, talking about a credit line that it got over from Coinbase. So certainly activity coming back up this summer for crypto.
Yeah, very interesting moves in the markets here, Sonali. I also want to point out another big boost for Bitcoin has been another ETF filing, many that we've seen over the past couple of weeks, sending it close to the one-year high that you're talking about. This is Bitcoin ProShares Bitcoin Strategy ETF. It's BITO. We call it BITO is the ticker. And that is the flows that you're seeing there. Inflows into this ETF, which had been pretty close to dormant for a while, have picked up to the highest level that we've seen since June of last year as well. So another ETF filing basically driving the price higher. Also, the thought is maybe you have Russian oligarchs moving more money out. Maybe you have the Texas heat wave causing a slowdown in mining, which also could drive the price up. That's something we're going to talk about with Alex Thorn in just a moment.
A lot of maybes, a lot of questions to be answered for sure. But another potential ETF filing coming into the picture, sending Bitcoin close to that one-year high is asset manager Fidelity. That spot Bitcoin ETF, according to the block that they may file for, we have that right after that BlackRock filing as well. We are joined now by Bloomberg's Vildana Heinrich for more. Vildana, it was so nice to write that story with you about BlackRock. What does it mean now for Fidelity to also be entering the scene? We haven't seen one from every major ETF company, but this certainly seems like the direction of travel is more institutional.
There's definitely been a wave of filings following BlackRock's, I think we've been calling it shock filing or shock application, which was really important for crypto fans and for the crypto industry in general, given the stature that BlackRock holds on Wall Street and elsewhere, where maybe you had some analysts potentially saying that BlackRock might know something that others might not know or be aware of, where they might be more certain that they could get approval from regulators, which obviously we've not seen in the past.
And we're not seeing that approval yet, but we are seeing other assets tied to futures start to come to market. Just one starting to trade today that you've written about. The trading has been a bit volatile. What is the reception for futures ETFs when people are still so excited about the even potential for a spot?
Yeah, so we have a 2x Bitcoin futures ETF that started trading just today, which I think also was another shock development for a lot of crypto fans, because regulators have been so hesitant in the past to greenlight any such a thing. We have to remember a spot Bitcoin product does not yet exist. It's not by no means certain that regulators will actually greenlight one or that they will approve one, even if it's coming from BlackRock or whoever else. The Fidelity filing hasn't hit yet. If one does come around, I know we have that report from the block, but it is sort of exciting for the space and for crypto fans and for crypto investors to actually be seeing these big Wall Street firms and other ETF issuers showing interest, stepping in, putting out these applications, hence the rally in prices.
How much does it matter to investors, to U.S. investors, that we don't have a spot ETF here? Because there is one in Canada, right?
It's been there for years.
It's been there for years. Do U.S. investors, you think some of them have restrictions that don't allow them to make those purchases? Does the SEC also care that the Canadians have allowed it?
I think a lot of that had been thought of as sort of testing grounds to see just how well things would actually work, because we know regulators in the US have cited like market manipulation, scams, that type of thing. And I think, you know, even with the ProShares Futures Fund, which launched in 2021, so it's been almost 2 years now that it's been around, there had been worries about roll costs and how well it would track the price of Bitcoin, etc. It's actually been tracking the price of Bitcoin really, really well. So a lot of that maybe potentially by regulators might have been seen as testing grounds.
All right, Vildana, thanks so much for joining us. Vildana Heinrich, reporting for Bloomberg News on ETFs and crypto. Joining us now to talk more about this is Alex Thorn, Galaxy Digital Head of Firmware Research. Alex, great to have you in the studio. Thanks so much for joining Sonali and me. What's your take on this wave of ETF filings, especially after it seemed like the SEC wasn't going to let it happen anyway? Why would someone big like BlackRock go ahead and file?
Yeah, hey, Matt. Hey, Sonali. Good to see you guys. Thanks for having me back. Look, I think there's been a couple interesting developments. One, you have just a report from Elliot Stein at Bloomberg, a senior litigation analyst, was suggesting that there's perhaps a 70% chance that Grayscale could win its suit against the SEC over their GBDC conversion, which would come pretty soon. That could perhaps create a reason for the SEC to seek an exit valve here and maybe, you know, support a more traditional issuer in their application. The BlackRock filing also had a surveillance sharing agreement for a spot market. Other previously filed applications had surveillance sharing, but usually for the futures markets. And that has been something that the SEC has been saying in their rejections, that they want a regulated market of sufficient size with surveillance sharing agreements. So perhaps BlackRock is seeing some tea leaves. There's also been some chatter that maybe even a commissioner on the SEC has changed their opinion over time. I think if you look at some statements, particularly from Commissioner Crenshaw, they've had some very positive or moderate statements. In October 2022, gave a great speech at the end, had some very sort of forward-looking. Maybe there's been a change at the commission. It's not clear, but clearly, you know, BlackRock is the largest asset manager on earth, and the question is why now?
Yeah, I wonder also. Last time you were on the show with us, we were at 30,000. We then, you know, dipped down significantly and have come back. You told us that the SEC and the CFTC were really going to crack down on this market. They have.
Yeah.
Is that going to stay that way, or do you think they wanted to shake out the bad actors and then create a framework to allow this industry to grow?
I mean, I can only go by what the commission has said, and they've been clearly seeking a market structure that disaggregates things like custody and exchange and settlement, right? Whereas current crypto exchanges don't have that disaggregation. If you look at EDX, that newly launched exchange that's backed by Citadel, Fidelity, Schwab, Virtu, and others, they do have that disaggregation. So maybe that's another factor in BlackRock's mind. I don't think we know where they're going to trade their spot. So maybe it's somewhere like that. I would say the SEC has bitten off quite a lot here, right? Rather than do formal rulemaking, they haven't issued formal guidance in 4 years. They're now kind of rolling the dice in many consequential court cases.
But I still want to talk about all of the activity that's happening kind of in the face of all this regulation and all this enforcement that is happening. Because if you take a look, to your point, EDX launching, 2 different major financial firms saying that they might file for a spot ETF, BlackRock working with Coinbase.
Right.
Coinbase extending a loan to Cut 8 just yesterday. So what kind of activity is getting through the most, and what does this mean for potential adoption, even with that uncertainty that's frankly existed since the beginning of crypto?
I think Bitcoin is clearly safe from the SEC's, wandering eye, right? I think they've said that it's the only cryptocurrency that Chairman Gary Gensler has said is not a security. The Coinbase custody agreement with BlackRock for their ETF, it's Bitcoin custody. It's not really, I think, related to most of the complaints that the SEC has had. I think when you think about, again, Hut 8, Bitcoin miner, I think Bitcoin has a lot of tailwinds at the moment, partly because it's not named in any of these suits as possibly a security. It's not under attack. You don't see any of the Bitcoin-only companies being, sued by the SEC, for example. That's clearly supportive for Bitcoin. But also, you still have that same macro environment, right? I mean, it's evolving, of course, but there's still a lot of reason to be interested in a non-sovereign, global FX, which is how I described it last time I was here. And you combine that with the fact that this thing is seeing huge inflows, right?
So you're above 30,000. However, you were there to the point that you were making weeks ago as well. There's not a lot of upside yet that we're seeing. There's probably a lot of uncertainty under the market too. How much does EDX and kind of new trading venues really add to the market in terms of institutional adoption, liquidity, especially for a firm that has a significant trading arm too?
Yeah, I mean, if EDX and its structure can bring in new types of investors who just for whatever reason can't play in the current market structure, which is totally understandable, right? Because crypto market structure is pretty unique, right? So then I think that could be pretty interesting for Bitcoin. I think just in general, we're seeing some pretty chunky flows again. I know I was joking before, it's a bit of a hysterical market sometimes because of how volatile it can be. But we've seen a lot of interest in long-dated options. We've seen a lot of spot interest from traditional hedge funds in Bitcoin and Ether. And so people are back and interested. I don't know if it's just BlackRock. It does feel like BlackRock's filing kind of broke a dam, but there was clearly pent-up demand.
Yeah, Alex, great to get your take and great to get Galaxy's take. Thanks so much for joining us. Alex Thorn there of Galaxy Digital. And coming up, Chicago Fed economic advisor Jonathan Rose joins us next on his findings about the run in crypto in 2022. How much was lost and how quickly? And by the way, to access all of the latest data that we have on the Bloomberg, just type CRYP Go on the terminal. This is Bloomberg.
We're seeing a real turning point.
I think it's game over for crypto. I think it's game over for Coinbase.
I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space.
This is going to become increasingly commoditized, and their ability to lure in retail is going to become impossible because retail got burnt on crypto.
The next logical step is for Bitcoin to 10x from here and then 10x again.
This is certainly going to be a long, expensive path.
Those are some of our recent guests commenting on crypto sentiment. Let's see if my next guest, Jonathan Rose, Chicago Fed economic advisor, can help shed some light on what shaped the sentiment, certainly last year. Jonathan, really appreciate you joining us here on the program. And you and the Chicago Fed conducted a study to see how fast the crypto run happened in 2022. And I think more importantly, how large it actually was. We all covered Celsius and Voyager, those collapses, and FTX to kind of crown it off. But we haven't ever really gotten our hands around a number. Have you been able to quantify, Jonathan, at the Chicago Fed, what happened?
Yeah, that's right. Thanks for having me. And so in addition to the firms you named, we also looked at BlockFi and Genesis, and you used bankruptcy documents to characterize the outflows that they had just before their failures in 2022. And so, what we saw is a classic financial crisis. We saw billions of dollars flowing out. In the most extreme instance at FTX, it was within just a few days. At the others, it was over the course of a week or two. The investors that were able to leave, they left at 100 cents on the dollar. The ones that didn't, they're still creditors to the bankruptcy estate, as you know. So there were, this is an important policy issue that we thought we needed to look at because of the serious lapses in investor protection that we saw with, instances of these firms offering 10, 15% returns on certain investments and making risky investments in firms like Three Arrows Capital or in the Terra Luna project and suffering losses and causing some of their investors to flee.
So what was the number that you found? You looked at Celsius, Voyager, BlockFi, Genesis, FTX. When you aggregate all of those losses and the bankruptcy filings you went through, how much damage did they do?
I'd say I think the most severe run was at Voyager Digital. They lost 36% of their assets over the course of a couple of weeks, and that was several $100 million. Overall, it was in the billions. Of course, it depends on how you value it, because these firms, by the time they actually went bankrupt, the crypto assets they were holding were worth less. It would be almost double in 10 or 20 billion if we valued it at the peak of their crypto asset holdings.
You see an industry here that's kind of in search for new players when it comes to trading and exchanges and even lending here. When you kind of look at the research that you've done across the firms that have gone bankrupt, what are the things that you worry about the most in terms of behaviors that might repeat itself?
Yeah, I mean, I think this is an industry where we've seen instances of trying to avoid regulation. In the case of these 5 firms that we studied last year, the most important regulation at issue is securities laws. And, if they were offering investment products that were promising high returns and they weren't registering them as securities. And so this is the exact sort of lapse in investor protection that securities laws are concerned about. I'd also say more generally, I don't need to tell you, there have been acts of fraud in addition to the well-known cases involving FTX. There's also, for example, Celsius and the fraud accusations that the state of New York has brought against its leaders. And that's the sort of thing that can lead to run behavior because people who've studied runs over financial history, they find that when investors have trust in their financial institutions, they're more likely to stick around during a crisis. And so when you have an ecosystem like the crypto asset ecosystem, in which there have been a number of frauds and unexpected losses, I think investors might be particularly skittish and prone to running on institutions in a crisis.
I'm looking at your study, Jonathan. I see that Celsius marketed the platform with catchphrases like "banks are not your friends" and "unbank yourself." Voyager Digital urged customers to beat your bank. So,
yeah,
I mean, this is really a pitch that these firms were making, Sonali.
Well, what's interesting here too, Matt, I'm kind of curious to hear one more thing from Jonathan here, which is that there are a lot of regulators out there who believe that crypto is kind of a fringe industry and a risk that's on the horizon. But we have a Chicago Fed historian here telling us that this is a classical financial crisis in some ways. Do you think regulators are realizing the ripple effects here, Jonathan?
I think they're super focused on potential ripple effects and trying to assess them. I mean, I think for the most part, the crypto asset ecosystem is not too interconnected with the rest of the traditional financial system, but we did see some at the end of last year, especially with Silvergate and Signature, 2 of the most important banks in terms of serving crypto asset customers. And, the collapse of FTX and other volatility in the crypto asset ecosystem last year likely contributed to their defaults. And were one factor in the banking problems we saw, especially at their height in March. So that's the sort of unexpected spillover in the traditional financial sector that I think financial regulators are very focused on.
Jonathan, I wonder, when looking at a lot of these firms, they had differentiated units in, for example, FTX had a U.S. unit that wasn't involved in the collapse and failure of the larger international unit that was based offshore. A number of these businesses are breaking themselves down regionally. And of course, the concern is that U.S. investors get caught up in it by using VPNs or some other means, investing in international assets. But we don't know. Were you able to decipher in any way how much these bankruptcies impacted U.S.-based investors as opposed to international?
Well, for the most part, the bankruptcy courts kept the usernames confidential, except for Celsius, where you can actually see the names of every one of their users. But and so you can see a number of international users with names in other alphabets, for example. But that's a tough question, and I think one that regulators are probably still sorting through the extent to which U.S. customers are accessing overseas platforms. But they had a lot of U.S. customers, these platforms.
Jonathan Rose, thank you for your research and your time. That is Jonathan Rose, Chicago Fed economic advisor. Coming up, Bitcoin mining shares have surged in 2023. Now the group feels the heat as Texas power demand hits an all-time high. That conversation is up next. This is Bloomberg.
This is Bloomberg Crypto. I'm Matt Miller in New York with Sonali Basak here. Kaylee Lyons is on assignment. Now, Texas continues to roast in searing heat with temperatures around Dallas forecast to reach triple digits today. It's putting power infrastructure under immense pressure, and that's hitting Bitcoin miners in the state. Our own resident, well, she was a resident Texan, Kriti Gupta, who now lives in New York and works with us here. Thankfully, joining us in the studio. So it's not just because you're from the Big D that we brought you, and you kind of spotted this story and how it links to crypto. Explain it to us.
Yeah, well, every time I see Texas in the headlines, my ears kind of perk up. But as your resident Texan, I'll say that. Look, this is really important because when you look at the Texas kind of power grid, you think, well, this is just a simple function of the heat. Everyone's going to turn their air conditioning on. But that power grid, which, by the way, only Texas uses, and some parts of Arkansas, but like really only Texas, also is the grid that a lot of Bitcoin miners use. And it's kind of been a function of this move towards doing mining off of cheaper energy sources.
Right.
So you see this around the world in parts of Siberia, for example, or Kazakhstan or China, where energy sources are incredibly cheap. The same thing applies to places like Austin, Texas, for example. But when everyone's going to go use air conditioning and mining at the same time, the power grid gets stretched. And
Right.
this is kind of something that we saw last year as well, where summer heat wave came, the power grid got stretched, and Bitcoin mining actually fell.
But the good news is in the winter, when no one's using AC in Texas, these miners help keep these energy producers profitable, right? They're a great customer.
Yeah.
But when the heat gets into triple digits and the grid is under threat, the miners just stop mining Bitcoin, right? And the hash rate drops.
Right, and this is also a part of kind of the politics here as well, because when you start to see the Texas regulator and a lot of politicians come out and say, well, we have to conserve energy, and you see that on the consumer front, on the business front as well. Even some people saying you shouldn't be working from home because it would kind of help bring down the energy costs as well. Bitcoin is going to be a part of that story. That being said, I think what's different this time around relative to 2022 is that those warnings and that encouragement of pulling the usage down in 2022, which ended up pulling mining down by about 18%. In 2023, you haven't had those warnings yet. That being said, it's still only the end of June. We could still see that. But I would say that's perhaps the big difference.
All right, Kriti, thanks very much for pointing out this story and joining us on the show. Kriti Gupta there. She anchors the 5 a.m. show for us here in New York. A programming note, by the way, next week, due to the holiday, we will be on at 1 p.m. New York time on Thursday, July 7th. We'll see you then. This is Bloomberg.